In this video we are going to learn about the Nifty 50 Momentum Investing Strategy, which has converted 3 lakhs to 1.4 crores in last 20 years. Also we'll show you how you can create the strategy step by step, backtest it on last 20 years data, and can deploy your real capital. Without further ado, let's get started. Let's go to Quantinuous and start building the strategy first. You can click on the Quantinuous link given in the description and can come to this page. For the strategy, we will select stock universe as Nifty 50. Then we have to select backtest period as 20 years. Portfolio size will be 10 stocks. We have to select the rebalance period as 1 month. Absolute momentum condition will be EMA 50 greater than EMA 100 and EMA 100 greater than EMA 200. Nifty momentum condition will be Nifty 50 greater than EMA 100. Select the initial capital as 3 lakhs and we have to click on backtest. Don't worry, I will explain all the conditions and the strategy in detail after the backtest. Okay, we have received the result. The initial capital was 3 lakhs and the final capital is 1.4 crores. Got the average CAGR return of 21.18% for last 20 years and the max drawdown is around -19%. In last 20 years Nifty 50 has given the return as 15% CAGR, but this momentum strategy has beaten the index return to a very high margin. Another important thing to be noted here, in 2008 Nifty crashed around 60% from its peak, and in 2020 COVID crash market corrected around 37%. But our strategy only gave drawdown of 19%. So we have outperformed in the upside and also in the downside. That is the magic of momentum investing. Now let us understand the strategy first. As part of this strategy, at the beginning of every month, we have selected the top 10 stocks of Nifty 50 universe. You can see over here, the calculation is started from 2003 and the strategy has purchased top 10 stocks at the beginning of the month and it hold it for that entire month. At the beginning of the next month, the portfolio is rebalanced and it recalculated the top 10 stocks again. As you can see, ICICI Bank was not there in Jan, but it got added in the portfolio on Feb. Any given point in time, strategy is holding only top 10 performing stock and holding for 1 month. Now let us see a very interesting feature of the strategy. We have added a condition, Nifty 50 is greater than EMA 100. What it does, it holds the strategy to deploy capital if Nifty 50 daily close price is below EMA 100. Let us go to Nifty 50 chart and let's take the example of COVID crash in 2020. Market went below EMA 100 line in 1st February and after that market was below EMA 100 till June. During this entire period strategy didn't give any entry signal, so our capital was not deployed in market and we didn't face drawdown during this entire period. Now let's go to Quantinuous and see. After January we have got the capital deployed in July. In between we didn't face any drawdown. So this strategy helped us to reduce drawdown to a very high extent. Now the question will come that we have understood that it's a profitable strategy and it has given a very good return in last 20 years, but how to deploy capital if we want to? In Quantinuous we have a current month portfolio button, where end of the day of every month first trading day, the strategy calculates the current month portfolio. You can generate the portfolio after the data refresh, so you can deploy your capital on the next trading day. One thing to be noted here, this portfolio is generated through the Quantinuous backtest algorithm. So, do your own research or discuss with your investment advisor before deploying capital. Now people might ask that, we have got to know so many of positive things of the momentum investing strategy. What are the cons of it? First of all, momentum strategies are very high volatile strategy. You can experience a very high drawdown in a given month. As you can see, the strategy is going through a drawdown right now and we have got around 13% drawdown from its peak. This volatility and drawdown should be considered before deploying capital in it. Secondly, you have to rebalance your portfolio every month based on the calculated portfolio by Quantinuous. Hence, you need 15 to 30 minutes every month to rebalance your portfolio. Subsequently, one question will also come: which one is better, either Nifty 50 Momentum Investing or Nifty 50 ETF Index Fund? Clearly, there is no doubt that in momentum investing you will make way more return than index funds. Your 3 lakhs investment in ETF or index funds would have become 50 lakhs, whereas in this momentum strategy it would have generated 1.4 crores from the same 3 lakhs investment, which is almost 3 times return than index fund or ETF return. But it is only helpful for those who are interested to handle and rebalance their portfolio every month. It is always important that before following a strategy, do the paper trading of the strategy for at least 2 to 3 months. That will give you the understanding of the daily volatility of the strategy, and it will help you to gain confidence. Once you are comfortable in the paper trading result, then only you can consider deploying real capital. I hope this was a helpful video where we explain the strategy creation, backtest, and capital deployment. Also, we discussed all the negative points of momentum investing which you can consider before following the strategy. You can also check the popular backtest section in Quantinuous, where you can do this backtest with just one click. Log in to Quantinuous and start your own backtest today.